All right, welcome back, traders. Kyle Bazzi here with Dennis Dick. I'm subbing in for Joel Connon, and with us on the show this morning we have Mr. Adam Button, the editor and analyst from ForexLive. Good morning. How's it going, Adam?
It's a long morning so far, but glad to be with you guys.
So that's what you're
What?
telling us. What's been going on over the last 25 hours?
A little bit of an ice storm hit eastern Canada, and it's just snarled air traffic. Right. Everything goes through Toronto, and it's just stopped there. And flights are full around this time of year anyway, and so giving up on air traffic. I couldn't get anywhere for a couple of days, so now it's train traffic was full too, and now it's onto the bus. So I'm on the Greyhound on the road here, halfway between Ottawa and Toronto.
Wow. No, I saw pictures there from that ice storm. That is absolutely incredible there. You got like trees smashing through car windows, trees falling on houses. It was a crazy ice storm. Funny thing is down here, Detroit, Windsor area, I'm actually in Windsor, but they were talking about this ice storm coming in, and we just stayed just warm enough that it was just rain for us. We were about 2 degrees, we're train 34, 35, so we were just above freezing. So I guess we got lucky here, but holy cow, looking at the pictures up there from that Toronto area, and they just got slammed.
Yeah, I mean, it's people skating down the streets. They said here. I mean, I got in late last night, and it seemed fairly warm out, or right around freezing. But I guess that's the problem, just around freezing temperature, and that's it. Nothing runs, nothing works. So we're going to try to make the best of it. And for markets, it's not such a bad day to miss out on. We had a bit of data come out, and other than that, it's going to be a quiet day. So take it as it comes, and try to get home for the holidays.
Now, wait, did you say you're on a Greyhound bus right now?
Yeah, that's right.
So everyone's listening to the show sitting around you.
Yeah, is that the Benzinga first? Your interview from the Greyhound.
There we go.
That's awesome.
Gotta make it there as fast as I can. So.
Well, you sound good, actually. You sound crisp here, so that's good that you're coming. I don't hear no bus noises in the background, so. Which currency? So you're a currency trader and currency strategist there. Which currencies do you focus on there, Adam?
Yeah, mostly trading the euro, the yen, dollar, Canadian dollar, Aussie dollar. Let's stick to those two. Stick to those ones in the sterling, and bounce it around and try to pick up a few pips here and there, and stay on top of the news is really the name of the game for us.
So are you a short-term, like scalper type trader? Or are you a day trader? Are you a swing trader? Like, what's the time frame that you're trading these currencies?
For analysis, we try to help anyone trade sort of any kind of timeline, but not so much scalp. You want to be in and out, in a matter of hours, for the most part, or holding trades for days or weeks as well. But a lot of times, based on some sort of macro theme or around some sort of data or technical level, breaking in the market is what we cater towards.
Now, which currency are you really looking at here as, what do you like going into 2014 here? Which currencies are you bullish?
We're at the tail end of a really impressive wave here, or really on it. It's hard to say it's the tail end. I think it's the tail end. The Japanese yen has been dropping now. If you look at sterling against the yen, it's 8 weeks in a row of gains. Like euro yen 6 weeks in a row, dollar yen 8 weeks, consecutive weeks of gains, and those kind of trends, eventually have to end around this time of year. Generally likely to end anyway because there's so little trading. So that's really the theme going into next year: is the weakening yen, stronger dollar, stronger euro, and it's a very crowded trade at this point, but it's a trade that's based a lot on Japanese, continuing to print money, a little bit of a recovery in Europe and in England, and a recovery in America as well. So we like that trade to continue, but it's very difficult to get in at the moment. There's so much momentum behind you. It's such a crowded trade. So we look for that to correct, in the next 2 weeks, 3 weeks, and hopefully get a bounce down for a bit of better entry point, and then try to ride that or try to pick that up again.
Now, looking here, obviously we had Bernanke do some tapering here, a little bit of tapering. I guess Kyle's calling it the tea and tapering there. Now, what do you see going forward here? Is this going to continue to help the U.S. dollar? That obviously the tapering has begun. Is this good for the currency in your opinion here, or was the tapering just a little bit too light?
No, it's going to be good news. I mean, you look, January is going to be here fairly quickly. We're going to get a bit more tapering then in March. You know, what you really have to keep a close eye on is growth data and inflation data. And you know, the consensus is getting quite positive about the U.S. You know, predictions above 3% growth next year. And until we see something a bit more sustainable in the data, that can be vulnerable. And the other one is inflation. You know, we just had PCE data out at half past the hour here. And on the core side, it was soft. And if inflation stays low or stubbornly low, you know, it's difficult to see the dollar really putting in a banner year. But, you know, if we can compare it to Japan, we compare it elsewhere, it looks good again. You know, another one I didn't mention is Australia. You know, it's coming off a lot of years of very, very good growth. And we have that one again, Australian dollar down 9 weeks in a row against the U.S. dollar.
Wow.
And you know that's the record. It's never fallen 9 weeks in a row since it was floated in the 70s. And so we're looking for a bounce there. But the U.S. dollar looks very good against some of these things. You know, Canadian dollar as well. It's had that sort of run to the downside. And the danger is the crowded trade. You know, Goldman Sachs has been talking about Canadian dollar weakness. Seems like everybody's been talking about Canadian dollar weakness, and same as Aussie weakness. So you don't want to be the last guy into that trade. I'm going to risk a little bit of a bounce in your face. If you can get those ones at better levels, I mean, it's all set up very nicely. It's the Fed working for you now if you want to be long dollars, and you just have to watch the macro side and keep an eye on stocks and make sure you try to manage the risk.
Now, Adam, that was something you touched on inflation, and the one surprise that everyone was talking about last week was we might have, Dennis said we got the tea and taper with them taking off $10 billion off printing the money, off printing money each month. But the short-term interest rate, they said they're not going to move that for a foreseeable amount of time due to the unemployment rate, and a lot of that had to do with the inflation not getting to 2% right now. And what I was talking about last week a lot was wage inflation. You know, we might be seeing prices getting higher, but we're not seeing anybody asking for higher salaries because they're still just happy to have a job. And one of the main reasons was that we might be seeing unemployment drop, but it's a lot of the low income jobs, not where we want to see the medium income, and that's dropped $4,000 from $55,000 per year to $51,000 from 2010 till now. What do you need to see from inflation over the next, let's say, 2014 for an even stronger dollar?
Yeah, I mean that's the sort of element that just isn't going to come. I don't think, that wage inflation, and it's a bit of a conundrum. You're going to have a growing economy. There's so many discouraged workers, so many workers working below really where they should be. And then if you look at something like manufacturing, a lot of those $25 an hour jobs are $15 an hour jobs now. For that to happen, I think we're going to need sustained growth over a number of years for that to sort of add to wage pressures. And in the cards for this year, I don't see that coming in any way, really. Where we might see some inflation is in housing. There's not that much optimism on housing left anymore. We had 10-12% rally in house prices this year. But that could have some upside if people start to see mortgage rates go up and maybe crowd in, or people have been sitting on the sidelines waiting for a bit more certainty in the economy step in. But wage inflation, unfortunately, isn't there, and that's really, in a way, you want to see it get back to at least where it was before the crisis, and moving in the right direction. In a sort of soft 2-3% range a year at least, but I don't see any sort of foreseeable path to that, not in a globalized world. And everything with Obamacare, it's slowing it down as well. So uncertainty there, and unfortunately, the wage growth just isn't happening.
Now, do you see this? Let's just take you to the S&P futures here for a bit. Obviously, we're making new all-time highs in the market. I've always followed the currency along, and I'm an equities trader, so I focus there. But I always keep an eye on the currency, especially the Canadian dollar, because I got the Canadian backing too. But what I saw back in the financial crisis was typically, obviously, they were selling. They were actually buying U.S. dollars back then when the market was selling off. And then what we saw for the last couple of years, not in the last 6 months, but if I'm going back like 2012, early 2013, even in 2011, as the market rallied, the U.S. dollar would sell off. We're not seeing that here in the last few months. Why do you think that trade is kind of reversed?
Yeah, and it's genuine optimism about the United States. A lot of the times previously it was, it was good for the America to have a softer dollar. And you had this risk-on, risk-off trade as American money moves back out. These are genuine bets on the United States economy right now, and these big tech companies. It's a great place to do business. It is, unfortunately for the companies, or fortunately for the companies that work there, the wages are lower. And if you look at it now from an international investor, Canadian investor, I mean, you've got a 27% rally in the market this year, plus 8% on the currency or more. Even more if you're a Japanese investor. You're about even in Europe. But if you start to see that move higher again with the U.S. dollar, then you get some more money flooding in back into the United States, and so it becomes a bit of a virtuous circle, I think, for the United States dollar, and it's great news for equity traders as well. So, yeah, it is one of those sort of trends, and the market will go through themes for 5 or 6 years over history, and you see, well, everything will correlate one way, and then it'll go another way, and a lot of it's to do with the tapering and the Fed getting out of the way, and it'll be interesting to see how the bond market reacts. We're not seeing a big sell-off we might have thought we saw in bonds, and 10-year yields are still close to that 3% mark, and when they hit that can start to change things a little bit in terms of the equity market.
What do you see for interest rates here? Do you think interest rates continue to rise here? Short-term rates going up there, obviously, as the tapering comes back? Or what's your outlook for interest rates?
Yeah, I think it has to move higher. You do have that, on the one hand, you have money coming in the United States, but on the other, with the Fed taking away support, it has to go up and test 3%. And we'll see what happens from there. I mean, year-end, it might probably not happen, and then the start of the year, you have some money flushing around as well, so it's probably going to take 3 weeks before we get a real good read on where rates are headed. But at that point, if you start to get rates moving higher, I think you get to see some momentum in that trade as shorts pile in, and funds get worried about holding bonds.
Now, Adam, right before you came on, we were just talking about the gold's 13-year bull run coming to an end this year with 29% annual loss. Can you talk about that and what you're seeing that do to any other currencies you're trading, and what's your outlook for gold in 2014?
The gold rally was built on 3 or 4 sort of pillars. One was fear about inflation, which has never materialized, and now we're having a bit of a deflationary cycle. Number 2, deficits. Deficits are moving in the right direction now, even in Europe, which is farther behind the United States. You had fear about some catastrophic economic outcomes was another. All these tail risks, and those are receding as well. And so you don't have the sort of, and then I guess the final one would be printing, and that's sort of the final leg that was left on the table, and that's been cut out now. So, if you were a gold bull, you don't really have that sort of strong, enthusiastic case, or even that you used to have with the gold bugs, yelling and screaming about all these things that were coming. And so now, with the central banks aren't buying, it's very difficult to get excited about gold for 2014. Again, we see that in the price. It's at 29% down. The next to drop is production. Unless production starts to decline, mines start to shut down, and we see a little bit of that, then you have a floor under prices. And I think when you see some large-scale shutdowns, that might be the time to buy. We hear around 1080 is a spot where profitability becomes extremely strained in some mines. So that's a level that I'm looking for, and maybe it's a place to buy.
1080. So that would not be good news for gold bugs here again. I think you're right. I think it's just gold is all about the fear trade, and like those 4 pillars, I like you talking about that. But that's all based on fear here, and there's just not the fear out there. So obviously, and what's your outlook for the overall S&P for next year? Do you think we're going to continue to climb here on the S&P as well?
Yeah. If you look at rallies, I look at 20-25% gains over the last 30 years in the S&P 500, and you look at going into December, they tend to run through December, and they tend to run early into the next year as well.
Yeah.
January, February are such
right.
strong months seasonally. Markets like this don't tend to end with a sharp sell-off. They tend to flatten out at the very worst. So, you watch the financial TV, you see so much enthusiasm about the economy, and I just see money just flooding in at the start of the year. I think there's another 10% here, whether it's justified or not. And, it's going to come early in the year. And then after that point, we're going to really need to see the economy, doing something in the right direction in order to sustain it. Otherwise, we'll probably have a correction.
Now, I'm on Dennis. I'm on ForexLive.com right now, where Adam is the editor, and I'm reading October Canadian GDP 0.3 versus 0.2 expected month over month. So, there's your Canadian economic point of the day.
Yeah, because there we
What's
go. Canada's it's chugging along, but it's one of those trades just kind of rides on U.S. growth, and we're going to need to see that again. But the Canadian dollar is a little bit on a soft footing. We went over to 107 on Friday, and it sort of kicked off it, even though we had good economic data out of the U.S. and the U.S. GDP report. So, maybe time for a correction, but at this time of year, you tend not to take the signal, too literally when you see in the market. It's so light, so flow driven that it's hard to really believe anything is behind anything at all.
So I'm looking at the Canadian U.S. dollar here, and it's right around the 106 area. This is the one I'm always interested in the most in because I am Canadian and live in Canada, obviously trading U.S. stocks. So I'm always end up converting, my U.S. to Canadian. What do you think I should do here? Should I be hoarding Canadian dollar or U.S. dollars? Do you think they go higher here against the Canadian, or what's your outlook here for the Canadian dollar?
Yeah, I think if you see anything around 105 as a Canadian trader, you want to start to get into U.S. On the other hand, it's probably a better year for the Canadian equity market than it was last year, so there's probably some opportunity here. Commodities are a little bit maybe a little bit early in some of those. Like I said, in gold, probably too early. So 105 is probably a nice spot to pick it up and stick with it, and let's see if we can get up to 110, 114. That would really take something from the American economy. There is no inflation. If there's no inflation in the U.S., there's even less in Canada. So I'd say Canada's really the canary in the coal mine on the inflation front. Barely 0.8% inflation year over year in Canada, and the Bank of Canada's on the sidelines, so the Canadian dollar has really no reason to rally.
Well, Dennis, I know you're talking about you need to jump up at 9:05. You do need to get off, or I figure.
I'm actually going to hop off here. I always take off and try to trade this open there. So, Adam, thanks a lot there. Really appreciate that.
Adam Button from Forex Live. Adam, now if I hop over to your website, I see one little ad on the right saying get Adam Button's Secrets to Trading the News if you sign up and don't miss a thing. So I want to know a couple of those secrets on our next conversation, dude.
Okay,
I want to stick around and know those secrets too.
Well, great, man. Thanks
Thanks so much for having me.
Yep, I'm glad you could get on, even though you're on the Greyhound bus right now.
Yeah, nice and quiet on here. So, rest up and enjoy the holidays, guys.
All right, happy holidays, Adam. Dennis, good luck trading near the open here. Folks, we're going to take a 2-second break, and we'll be back with you in just a second.